All righty. Good morning, everybody. Let me get my goodies up here real quick. Financial juice. There we go. All right. Good morning, everybody. Happy Monday morning, March the 9th, 6:30 a.m. Central Standard Time here in Kansas City, where I am located. Yeah, it's going to be another wonderful week, guys. We had a tornado here the other night, Friday night. We were watching a movie, and then all of a sudden we heard our cell phones go off. We heard the tornado alarms go off. We had a tornado about, I guess it would have been about a mile north of me, and it went off to the east. And I think it actually hopped over from the Kansas border over to the Missouri border. So that was interesting. The wind was just going crazy, guys. Remember, I live in Tornado Alley. So we get a lot of tornadoes here in Kansas. We just don't really get a whole lot of them in the city. The city seems to be a little bit of a firewall, so to speak. So we don't, they usually kind of die off in cities. We've all heard it. We've all heard that our whole lives. Growing up, they're usually out in the rural areas, but every now and then one will tackle a city. I remember growing up in Tennessee, and we had one in Nashville, which was probably at that time, well, it was about 2.5 hours from where I lived back then. So they are very rare to happen in cities, but they do happen sometimes. Get my lava lamp over there going, guys. Keep in mind, anytime you see a white light, that just means I'm flat, haven't had any trades come on, or I'm not currently in a trade. But if you see it red, that means I'm in a drawdown week. If you see it green, that means I'm in a positive week or a green week. So we'll leave it white for now, since it is the beginning of the week. So that'll give you guys something to watch during the course of the week each day. Okay. See if I'm in the green or if I'm in the red. So on that note, let me get my charts shared real quick here. We'll see what we got a rolling. But anyway, yeah, just to finish, we have a tornado shelter in our complex. We have 6 buildings in our complex, and 2 of our buildings have tornado shelters, including mine. So we step outside. It's, of course, raining like crazy, wind like crazy, and there was a whole stream of people from the complexes across the courtyard that were flocking over here, going into the basement. But I was looking at the map, and I had already seen that the tornadoes was just north of us. So, I wasn't worried about running down to the shelter because it takes me 2 seconds to run down there anyway. So, yeah, we rode it out. Got a ton of rain, but no damage on our end. I don't think we had a whole lot of damage. It just basically touched down for about a 4-mile stretch, but it was an EF0 on the Fujita scale, so it wasn't that big of one. So, but anyway, yeah, exciting Friday night, to say the least. But anyway, we're on to Monday now. So let's have a look. I do know, guys, as far as the economic calendar goes, we don't have any major red folder events until Wednesday, where we got our inflation report come out here in the U.S. Okay, our consumer price index. Just looking at this thing, looking at our main one, which is the year over year. Looks like we're projected to increase by 0.1%. So that is a good thing for the U.S. dollar, a obviously negative thing for the stock market, for our pocketbooks, etc. And normally this is where I would also say a negative thing for when we go to fill up our cars, and that is still true, but more so because of the geopolitics on the car filling up perspective because of oil, guys. Let's go look at oil. I got to just lead off with this because when the markets opened yesterday, we had just a crazy gap on oil, and I mean it just went off into the stratosphere for a while. But it looks like we've retraced quite a bit, but we're still over $100 a barrel. This is U.S. oil. Okay, that's just crazy. I mean, this gap. Let's measure that real quick. So Friday close 91.26, and then we gapped up 7.39%, and then it carried on to a jump of 30%, guys. Oil jumped 30% within that first 5 hours at one point at the top of the range. Okay, over 30%. That's just freaking incredible. That's insane. And then again, overnight. So this would have been, let's see, what time was that? So we're at midnight, my time. You can see we had a big, giant sell-off. Probably some profit taken, obviously, in the Asian session towards the end of it. But currently, we are 12%. Yeah, 12% above the Friday close. So that's still very highly elevated. We are over $100 a barrel. This is just, I don't know, whatever superlative you want to throw in there, but that's crazy. Now let's look at Brent crude oil. Okay, it's over $100 a barrel as well. You can see we had the same type of gap. Friday close gapped up 9%, a modest 9% compared to U.S. oil, but it had a high range of 28%, so a little less than U.S. oil. But then currently over here, we are at 12%. So that's very crazy. This right here is why, especially if anybody was thinking of shorting oil on Friday, hopefully not too many people got in towards the end of the day, okay, trying to say, well, this is the top. This is the top. Well, remember, you never want to try to stop a ship, a rocket ship. This is why right here. Because if you got put in a short sell, and let's say that you tried to think about it, you put in a short up here, but you put a stop loss just above the highs. Well, look at this. You come in. I mean, you could have given it a very generous stop loss. Maybe you wanted to put it over $100, right? $101. Well, you still got gapped above that. So think about that. There ain't no stop loss going to save you on that. Okay, that's just an insane move. So this is why I don't like to be getting into trades and staying open over the weekend, because you come into crazy stuff like this, especially when we got a war going on, a couple wars. Okay, everybody's kind of like used to the Ukraine-Russia war, but not when it comes to the campaign with, the U.S. and Israel and everybody else that's joined now because of Iran. So yeah, RIP to the people that did get into trades here. I mean, look at that. You got some red candles up here. You got red candles. So that tells you people shorted here. Okay. And I'm sure a lot of them people probably stayed open thinking, oh, we're going to calm down. We're going to come in on Sunday gap or Sunday open for me in the States, Monday across the pond for you. And, we're going to come in and go down. Well, there's some people probably with blown accounts as of market open yesterday because of that. Okay, it's sketchy to be trying to hold trades open, especially when you're going against the grain, going against a strong uptrend. And there you go. But yeah, the proof is in the pudding where people, if you see a red candle, that's where people shorted. So how many people lost their money because of this gap, this Sunday gap, right? So anyway, let me know, guys. Let me know if you have anything you'd like me to bump to the top of the list, any assets. But as far as top setups go right now, and I really don't have that many alerts set. I got to be honest. This is probably the lightest my alerts have been set in a while because I'm trying to stick a little closer to the top, to the edge finder. Not that I don't always stick to it, but I do kind of throw a whole bunch of stuff out there that's a little farther out. So I'm really just trying to stay closer to home. But yeah, this is my set of alerts as I scroll. Okay. That's it. Now I've already had a few of them hit, so we'll take a look at those in a second. But just to take a look at Yahoo Finance. I like to start here, guys. I like to take a look from a 30,000 foot view at what the main legacy sources have. Okay. Not to say that that's better than anything, because I don't think it is, but I just like to see what everybody else is seeing. See where see if there's anything that pertains to the assets I trade, and see what the quote unquote dumb money is going to be looking at. Okay. Remember, most people lose money. So if they start reading some of these articles and falling for the traps, then we know where the liquidity is going. So yeah, I just like to start here, see if there's anything major. Okay. Stocks, trend losses, oil pairs, gains. Okay. That's G7I's intervention. Okay. So still Japan intervention talk is in the market, or is in the news cycle, I should say. Stagflation. Yeah. See, when Trump signaled the wider war, that's probably part of the reason oil jumped like it did. Let's see what else we got over here. Oil, sir. Yeah, more oil news. We just saw the oil prices past $100 a barrel as war escalates. Okay, so not a whole lot of stuff here except the oil news, which is understandable. Oil smashes through $100. And Iran's they did get a new supreme leader. Okay, this is one of Khamenei's sons. I do believe this was the second son that was tabbed to be the new supreme leader. Because didn't they shoot down one of the other ones? So basically, they've shot down. What's going on, SunFX? Basically, they've already nominated. I think this is the third or fourth. Is this not the third supreme leader they've nominated in the last week? And of course, two of them they nominated got gunned down within like the first few hours. I think one was a day, and the next one, the second one that they nominated, got gunned down. Didn't they strike him down in within 4 hours? If I remember, I think I read where they got him. They named him at 2 p.m. or 1 p.m., something like that, local time. And by 5 p.m., he had a missile thrown at him. So, yeah, you talk about the most dangerous job in the world right now. It's just simply getting nominated as Iran's supreme leader. SunFX. Oh, yeah, trading. It's going all right. Yeah, I'll get into I'll talk about my trades from last week here in just a second. So yeah, let me see here, boss. I suggest. I thought you have one, man. I'm trying as far as the subs go. Yeah, I don't know, man. I'm trying. I do all the creative titles, descriptions, tags. I'm trying it all, man. Trying to grow this list. I suggest, boss, just live on short. What do you mean live on short? What do you mean by that? Yeah, I'm all ears, man. I'm trying to do a lot of. I'm trying all I can to get some subs. It's tougher than I thought it was going to be, but yeah, I'm doing it for the love, for the one. I mean, yeah, it'd be nice to grow this. But it's just a slow process. Yeah, a little bit on the slow process side, but no big deal. I'll get there. Live on short, boss. Fastest grow the channel. I'm not quite sure what you're saying. Live on short. What's short? Is that a platform? Is that a program? You might have to elaborate. I'm not sure what you're saying. Want people come and boss, but want in talk, so it's good in short. And I'm not I'm not sure what you mean. YouTube boss. What is YouTube boss? Yeah, I don't know what that is, but let me carry on. If you give me some more details about what you're talking about, yeah, I'd be interested in checking into whatever. People come and leave, boss. Yeah. Yeah. I'm just here to share my stuff. Yeah, I really am. I'm not, this is just more so for, for my own, I guess, excitement. If I grow it, I grow it. If not, no big deal. This is a labor of love. It's really kind of the way I look at the stream. But anyway, I'll carry on here. As far as the financial juice goes, yeah, no major items in front of me on this list. It's kind of interesting to see Bit and Soar on the list here on financial juice. This is a, I don't get into too much crypto stuff, but I was actually working with a company that uses this crypto platform, and I don't really know a whole lot about it. It's too technical for my understanding of it, but we were basically okay. So Bit and Soar price forecast how faces major resistance. I was working with a trading company very briefly that was using Bit and Soar and the Tau crypto for their platform, their network, on some trading challenges. And I don't know. It got to be way too confusing working with these guys because you almost had to be like like a coding nerd to understand this stuff. So I kind of checked out of it. But anyway, it was interesting to see them on the front page of FX Street. Thought that was interesting. Let me go click the Forex news real quick. Go over here. Channel. I want to grow your channel, boss. You want to grow my channel? Is that what you're saying? Oh, I see what you're saying. Well, say a prayer for me. Say a prayer for me. That'll grow it. But anyway, as far as Friday goes, guys, we had a COT report that had come out. And I was looking at it yesterday, and it looked like the biggest winner from last week, which really, this is no surprise, was the Aussie dollar. Okay, the Aussie dollar is still currently the strongest currency. Okay, the Aussie dollar, and we'll look at the surprise index here in a second, but it's exceeding expectations on 83% of its high impact news events. Okay, 2.7%. So you got that as the strongest, but you also, on the flip side, have the weakest currency, which is the pound. And it's no surprise to see it being sold off down here. So you're selling the weakest currency. This is the big banks and institutions, which makes sense. And then you're buying the strongest currencies. So, hey, COT reports laid it out perfect, because when we look at that and then turn around and look at, if I go down here to the macro scanners, to the surprise index, okay, there you go. Aussie at the top, British pound at the bottom. So there's that. And that right there is the number one currency pair on the short sale list when we look at the top setups. Pound Aussie. There you go. So needless to say, short and simple, that's the number one asset on the list to short. That's true. Short is good to hook. Oh, I do all that, man. Yeah, I do shorts every single day. I look for the hook at the start. I look for the value in the middle. I look for the call to action at the end. I'm doing all the stuff, man. I don't know. The algorithm just hasn't figured out it's liked me yet. And then I do a weekly video. Yeah, let me go show you. So I did a weekly or a Sunday video rather. Yeah, I'm doing all the stuff I was told to do. Shorts. See if I go over here to my channel. Yeah, so you got all my shorts here. I do those every single day. I come up with the fun thumbnails. I personalize them each day. And then, yeah, I try to do a Sunday video. So like I did a Sunday video yesterday for you guys. And the theme for this one was just talking about my daily trading SOP. So basically, what do I do every morning when I open my computer? Okay, why do I have all these tabs up here the way they are? Okay, there's an order to this operation, and that's why I put them in order. The video will explain it better, but basically I start from the Yahoo Finance, go to Discord, see what my crew's talking about, Ola Prime, my guys over at A1 Trading. And by the way, guys, let me know what you guys think about this. I created this photo of us contributors on A1 Trading. And I am surprised at how good that it got everybody's facial features, because everybody looks the same way they do in real life. Okay. I'm sure you guys can find me over here on the left, but they liked it so much they put it on their Discord channel and got a lot of likes and love. So that was kind of fun. But yeah, Discord. And then I flip on over to X and just see, especially right now, I think X is important because it's, you're kind of seeing, and I only follow presidents, premiers, prime ministers, central bankers, key figures in the investing industry, trading industry, just to see what's going on the daily. And then I flip on over here to see what President Trump is saying, because like him or hate him, he moves markets with just a simple tweet at times, right? Financial just so anyway, I don't want to get into it on this live stream, but yeah, check that out for anybody that hasn't, and you'll see, you'll get an idea of what I do. But yeah, I try to do all this stuff, man. It's just not seeming to grow as fast as I want it to. But anyways, say la vie. I'm sure the right group of people will find me eventually. But anyway, get back into it. Top setups. We just saw that Australia is the strongest currency. It's got economic outperformance. Okay, because of all reports, it's exceeding. So it's not a surprise at all to be seeing the Australia dollar on here for quite a bit of these pairs. There's 1, 2, 3. There's the Aussie dollar individual currency for futures traders, currency futures. Okay. Edge Finder has gained the ability now to separate out the currency as an individual rather than a pair. And then, yeah, pound Aussie. So you're Aussie. I mean, it's no surprise at all. And then again, to see a couple of these pound pairs on here as shorts because of the fact that the pound is the weakest currency. So there's that. Let me see what you got going over here. Short. Much live bonds. Only traders was almost 2,000. Yeah. The live. Are you still talking about YouTube Shorts? I'm not quite. If it's growing fast. Yeah, I can't quite understand your English, buddy. I'm sorry. It's just not making any sense to me. If you're talking about YouTube Shorts, yeah, I just showed that's what I do every day. I personalize all the tags every day. I utilize Grok to help me out with that. I'll plug in my theme of the topic du jour, what I'm talking about for the day, and it'll spit out the exact tags I should be using. Just I do a lot of optimization using that, so it kind of helps me out. So, like I said, I'm doing, as far as I know, I'm doing everything I should be doing. But anyway, getting back into it. So I just figured we'd take a look at some of these pairs over here and see what we got going. Aussie New Zealand, Aussie Yen. Now, I actually had some of these alerts hit yesterday when the market opened. So let's take a look at some of these and how they reacted. I wasn't too excited at the time with them, starting with the Aussie CAD. This is one that did hit this demand zone down here. It's a 4-hour demand zone. Now, at the time, let me look here. Okay, so that at the time I was looking at this for a possible buy, but when we get down to the 1-hour time frame, we had the 50 EMA drop below the 200. So the light blue line fell below the 200 or below the dark blue. So this was not giving me the look I wanted to see from a moving average standpoint, right? It was looking okay on a 4-hour time frame. But the problem is when we look over here on the daily chart, everything reversed on me. Okay. I needed the 8 EMA, which is the dark red line. I needed that to stay above the light red line, which is the 21. But as you can see, it crossed over right here. So when we get that crossover, hey, I'm out. Because then I won't be abiding by my rules if I turn around and try to buy in this demand zone. Everything else about it looked pretty good. So, but again, I was missing that key moving average crossover right there. So, and not only that, but when we had price come into the zone on a 4-hour chart, I mean, look at these wicks on top. See that right there tells me there's still a lot of sellers in the market, because within each of these candles, you had price scoot to the top, but then get slammed back down. So I'm just a little leery about it. Not only because the ADMA's below the 21 now, and the same thing on the 50's below the 200, but also the fact that we keep getting all these upper wicks. So that's got me out. That's got me out with no interest in buying the Aussie CAD. So yeah, there's not a trade to be had for me on Aussie CAD, even though it is, still on our bullish list over here. So I just basically need that individual pair to start making a new series of higher highs and higher lows. And then, we'll go from there. I think some of these other Aussie pairs are better anyway. Aussie CAD. Yeah. Good to teach, boss. You're good to teach, boss. It's really grow fast. You're a channel, boss, if you active shorts. Yeah, like I say, man, I can't quite understand your English, so I'm not quite understanding what you're saying. It's really, yeah. See, I don't understand the English, so I don't know what you're saying. Oh, sorry. Okay, Aussie CAD, that's done. Now, Aussie yen. So let's talk about last week. So with my trades last week, I had focused most of my week on a euro pound long, because at the time we were getting a +6 score on it. Okay, +6 on euro pound. And this thing kind of changed really the minute I got into this thing. So let's go here. So euro pound. Okay, and at the time when I got into this thing, we still had an 8 above the 21 up here. And then on the execution side of things over here, we were looking at, let me see, was it a 4-hour? Yeah, we were basically looking at, where were we at exactly? Tuesday. Yeah, we were looking at buying in this area here. And I'll have to go to a 1-hour actually, now that I think about it. Okay, so just a refresher. Come on, scroll in. Yeah, so we were basically looking at this candle right here. Okay, that was our entry with our stop loss obviously down here. So if I go fast forward, okay, we were in this trade here and we got our 1-hour close and it pushed up nicely, but then it just died off for the next 2.5 days and went sideways. Now, whenever it started going sideways, what had happened was euro pound started to lose its muster. So we started at a +6, but then like within that same day, it dropped to +5 over here. And then it eventually dropped to +4. And then I think +3, +4. So there you go, euro pound. So it basically fell off the list and turned neutral on us. So on Friday, when that happened, I thought I would get into another trade, this time for Aussie yen. And I was still in the trade, by the way. I got into this one Thursday evening. So Aussie yen, and this turned out to be a blessing because I ended up taking a loss on the euro pound, a small loss on it. But I got into Aussie yen, and it kind of mitigated my losses overall for the week. So on this one, I had, let me see here, bought in down here. Yeah, right here. Had bought in down here because of this demand zone bounce, and it was, I think, a 30-minute. So that's, 30-minute. I mean, there you go. This is a perfect looking demand zone right here. Indecision candle, very skinny doji candle That was the basis for getting into that trade right there. Oh, you're saying shorts live. I don't know what shorts live is. I'll have to look that up. So you're not talking about making a shorts video. You're talking about a shorts live. So in other words, doing it on my cell phone? Yeah, I don't know. I didn't know there was another live. Oh. One second. I gotta fix my breaker box, guys. All right. I had to fix my breaker. I have my power surge. I have my power surge. So let me ask you this, because you said shorts live. Is are you talking about doing it from a phone? Is that what you're saying? Because I won't be able to share my chart. Or unless you're talking about setting up my phone on the side. So like set up my Yeah, I think I know what you're talking about now. Yeah, one of my trader colleague friends, I think she does something similar to that. So I'll have to check into that. Thanks. You gave me some work for the day, man. I'll check into that today. I'll talk to Grok. Grok will hook me up with it. Yeah, I thought about doing that this whole time, like throwing on a Instagram live or yeah, probably Instagram live, because I know a lot of other people do it. So yeah, that'll be on my list next. I'll write that down. I finally understand what you're saying. Sorry, I just couldn't quite understand what you were saying earlier, because you're like shorts. I'm like, I'm doing shorts, but you're talking about shorts live. There, I wrote it down, boss. We're gonna take it. We're gonna check it out here in a little while after my stream. So I appreciate that. Do appreciate it, man. Okay, so we're back to this. So I was looking at this 30-minute demand. Okay, and as you can see, price dropped in, triggered my alert. It yelled at me, so I came over here, got into my trade, and then I ended up selling this thing up here, back over here. Yeah, right over here was where I sold. So I wanted to sell this while it was at the top, because we were butting into some supply zones up here at the time, as you can see. And I'm glad I did, because this basically covered half the loss that I took from the euro pound loss. Okay, so euro pound was a loss. This was a win. Now it's kind of funny. The euro pound was actually the one that I liked the most, and it turned out to be the one that lost. And the trade I got in that I didn't like as much turned out to be the one that won. So that's just kind of ironic how it happened out. But hey, I had a decision to make on Friday, and that was, do I leave the trade open and risk the Sunday gap, or do I close it out, take the profits? And at the time, I was glad I did, because on Sunday yesterday, we had a big ugly gap down. So hey, look, take the money up here. Price gapped all the way down here. Now it bounced into another demand zone that formed on a 15-minute, and this candle looks identical to the 30-minute candle I got in to begin with. Okay, 15-minute indecision candle, skinny doji candle, big long legs, okay, big long wicks. But then we bounced into that, and look what happened after that. Just bounced. So, my moving averages weren't looking great. Neither was my RSI on a 15-minute time frame. As you can see, we didn't quite get down there. But just goes to show the power of supply and demand zones. Yeah, see, even on a 1 hour. I mean, my RSI, even when we bounced into the zone, it was nowhere near the oversold territory. Okay, it got down to a 37, it looks like. But I was looking for the 20 level. So we missed that level. That's why I avoided it. But still, hey, demand exceeded supply when price bounced into the zone. And what happened? Price shot up. So, we've just got a bunch of this sideways nonsense. Okay, we got shorting up here. And then obviously down here we got, just a big swath of support. Okay, so we got support and demand, or support and resistance, what I'm trying to say. So here's our support, and then up here's our resistance. So it's basically just going straight sideways. It's just bouncing from top to bottom. Now, I don't personally like to get into sideways trend trades like that. I really don't. But every now and then you'll get one like this that just presents, some intrigue, because how many pips do we have in between there? I mean, you're basically looking at about 84 pips, we'll call it 80 to 90 pips of, opportunity there from zone to zone. So, I'm sure there's a lot of sideways trend traders that are having a field day right now. I'm just not, because I mainly stick to the trends personally. Yeah, man, I'll look into that. No, I do appreciate that. Yeah, I've had it on my list, and I just thought I would kind of do it the way I thought was right for the first couple months. But yeah, we're to the point now where I'm gonna start branching out and playing with some new things. And quite honestly, the other thing too is I've been so focused on it, trying to, trying to get a job. Let's call it what it is. I got all this knowledge and I love teaching and helping, but right now I'm kind of doing it at the expense of my monies. So I've went through a series of interviews on this financial analyst position I'm trying to get. It's also a content creation part to it. So, yeah, I'm hoping I can get rolling with that. If I could do that, I'll start being able to branch out a little bit. Maybe look into some content creator help or other lessons and things I can learn. So we'll see how all that goes. But yeah, anyway, get back into it. So that's obviously the end. I don't really have a play unless we drop down here to this demand at the bottom. Down here. But honestly, I would actually prefer this thing to keep going. If we could keep going, let me get rid of some of these lines. I got too much crap on here. Okay, we've already hit this one. So we're going to delete that. There, I just wanted to clean it up a little bit. So yeah, looking at the 1 hour chart, we still have the 50 above the 200. So moving average wise, we're still looking pretty good. This is kind of turning into its own, trend line. I don't really like to draw a ton of trend lines, but it's kind of generally following this path like this. So maybe, I don't know, let's go into a 2 hour. Do I have a demand zone? And I do. So look here. If we look at this chart on a 2 hour, we got yet another candle at the bottom of this range. Do we not? All right. Now it's a little fat for my taste, so let's go drill into it a little bit. See if I can find a smaller range candle somewhere. Efficient market because all the wicks are overlapping. Okay, so I don't like that on a 30-minute at all. 15-minute, all these wicks and bodies are overlapping. So let's go back to the 1 hour. I mean, on a 1 hour, we could look at this green candle as our zone. So it would shrink the range just a little bit. Okay. And let's delete this line down here. So perhaps I would look at a buy down here on this line. It'd be the proximal line of this 1 hour demand zone. But I don't. Let's go down a little deeper. Let's go to a 10-minute real quick. 10-minute, yeah, wicks, candles, everything's overlapping. So there's no inefficiency. Remember, I have to have an inefficiency in the market. The gap. Okay. 5 minutes. This is as low as I go. And the same thing. It looks like everything's overlapping. So there's just no inefficiency in this market. There's no gaps. There's no fair value gaps. So if there's no fair value gaps, then I stay away from it. It's got to have an inefficiency just ahead of the gap or just ahead of the zone I'm trying to trade. And I just don't see that. Okay. Yes, on a 1 hour, there is a small gap from here to here. So that gap is showing an inefficiency. That's what I'm looking for when I go to trade the potential demand zone, which is here. Okay, that's our demand zone right there on a 1 hour time frame. But it's just not enough inefficiencies on enough time frames. Okay, obviously the 2 hour, the gap's going to be, from here to here. like that. So that's the picture I like to see. I like to see this gaps just like this. But I'm not really getting multiple sets of eyeballs on it. That's the only downfall to this. Okay, we have a big gap on the 2-hour. We had a small gap on the 1-hour, but when I drop to to smaller territory, I'm just not getting it. So I've basically got a choice. If I wanted to trade this, I'd have to trust one gap. I mean, on a 4-hour, there's a very tiny gap, but that's not enough to get me out of bed. And not only that, when you zoom out, turn all the drawings off, is this not just one big sideways cluster? Yeah, we've already established that. So I might just settle for a cheaper price on this. And that's why I've drawn this, down here, this demand zone down here, which is of course coming from a smaller time frame. So yeah, I personally, that's why I stay out of these sideways trends, because it's just not worth it to me. I need a cheaper price. So I'm going to stick with the one I've already set up there. Yep. Okay. Yeah. Yeah. That'd be great. Be great. Be nice, man. Be nice to be the next big star on here. Not that I'm looking to be a star. I just want it to be worth my while. Right. I was hoping I would hear something by today on that position I applied for. I've went through 2 interviews. The first one was with, I think, the marketing manager. And then the one I had last week was with the 2 news desk managers. And then I think I have one more, if, assuming I passed, with either the CFO or the CEO. I'm not quite sure which one they said. But I had opinions and they liked that. They said that we're looking for somebody that has opinions. So I gave them some opinions. And we were shooting the breeze at the end, having a good little chat. So I think it went well. I'm just hoping that I hear something ASAP, because I don't want to have to start looking for other things. But anyway, Aussie Swiss is our 3rd strongest score. So let's have a look. Aussie Swiss. Where are you at? Aussie Swiss. There you go. Okay, looking at the daily, I've got my 8 EMA above my 21 EMA. That's good. Now, the one thing I dislike about Aussie Swiss, just from the outset, is how many wicks it has. Okay, this thing is so used to having big, tall, ugly wicks on the higher time frames. Okay, it's just tougher. It's not as clean of a trend. Now, obviously, you can clearly see this is trending upwards, but you can't. It's hard to see, man. It's just hard to see. I don't know. It's just tough. It's tough when you get all these wicks. So Aussie Swiss is definitely not a pair, in my opinion, for like a newer trader or a beginner to be playing with, just because of that from the start. So let's go have a look. In 4-hour, it's kind of the same thing. But I was looking. Let's see here. Aussie Swiss 2-hour time frame. Yeah. So started out, I was looking at this 2-hour demand down here, 50. Above the 200. Now remember, on a daily chart, I'm looking at the 8 and the 21. But on the execution time frame, I'm looking at the 50 and the 200. Okay. Oh, thanks, Son FX Pro. Have a good day, man. Back tomorrow. Right on. Have a good one, buddy. Appreciate the info. I'm gonna definitely get on that when I get over here. Excuse me. So anyway. Started off with this 2-hour demand I was keeping an eye on. Now, price, let me see if I need to go to a 1-hour. So here's the problem with it, though, because when I go to 1 hour, my 50 drops below the 200. This is the execution time frame. Okay, the script flips. The momentum is going the other way, and RSI didn't even get down to oversold territory. Now, remember, guys, this thing comes as a standard default setting of 70 and 30. Talking about the relative strength index, but I go for more extreme settings. That's why I have it at 80-20. So I only care about the most extreme readings. Most extreme readings typically have a very sharp rebound when they're, when all else is equal and everything else is going in in favor of placing a trade there. So yeah, just not strongly. It's just not oversold enough for my taste. So, it is trying to catch a little bit on its own, but I don't have any faith in it personally. And you guys can see I kind of drew in a couple other zones down here, also smaller time frames. But I will say the one good thing is we pierced this little swing high that I was looking at on a smaller time frame. Yeah, see this swing high here? We did end up piercing it. So it may turn around and go up on us after all, but it's nothing I personally am going to participate in. Just not too interested in it. It was looking awful tempting for a while, but we just could not maintain keeping our 50 above our 200. Okay. And part of the reason for that, not liking it when the 50 goes, against the grain on the 200 is we start getting in a, kind of a newer set of lower lows and lower highs. It starts turning into a little bit of an opposite trend. Now we're still overall in an uptrend. That's clear as day to see over here on the daily, but yeah, just not as good a sign as I want to see. I still like to maintain higher highs and higher lows on the execution chart, or at least, a time frame away or so. But we're just not getting that. So Aussie Swiss, I'm out. I do have a much further away demand zone down here on a 4-hour chart. This is my favorite look, but this is also looking at different time frames. Okay, we'd be coming down below this Sunday gap that we had from a week ago. Okay, there's definitely going to probably be some liquidity down here because of that. So nothing I can do on Aussie Swiss. Okay. Still about 60 pips, actually probably about 70 or 80 pips away from that demand zone. But this item only moves 57 pips a day on average. So it's just too far away. The only way I'd be interested in this is if it just somehow comes down to the zone within the next day or so. And honestly, even if it bounces into this demand zone down here, it probably still will not be exciting at all for me to buy. Because why? Well, let's take a look at the demand zone itself. Okay, talking about this green candle. Okay, it's a nice looking candle. It's one candle, so very little time spent there. I like that. But there are a couple problems with this thing. Number one, it didn't really have a lot of volume spread analysis. See these green candles down here? Those are average volume. Okay, this is stuff that retail traders are doing. And not to mention the blue candles as well. I just didn't see any institutional activity take place here, like we did this yellow candle back here, right? Or back here. When I have a demand zone or a supply zone form with a volume spread analysis candle that's green or blue, it's just not as exciting. I want to see a candle that is a zone. I want to see it created with institutional activity. Because if the banks, the big banks, the institutions, if they're the ones forming these candles, right, then that tells me that if price returns, perhaps they didn't get their full order placed, especially when I see a one candle zone like that, right? The 4-hour traders. Remember, a bank can't put in their full order down here when you only have one candle. It's just not enough time on that particular time frame. So if and when price returns, okay, then perhaps they can put in the rest of their order or just accumulate more of their position, right? So, but anyway, I didn't see the VSA activity. Also, when price left the zone, it didn't break this higher structure on that initial push up. Now it did eventually, but not till it got lazy and started dropping for a few days prior to that. So yeah, even though it's the third highest bullish score, it's just not as exciting to me from a technical aspect. It just really isn't. 8 a.m. Okay. So that's Aussie Swiss. Nothing to do here. Let's go have a look at our top setups, guys. Let's take a look at a dollar pair. So we have the dollar yen as the fourth strongest on here. Now, the dollar had a heyday last week, or I should say a hay week, if that makes sense. The dollar and oil were really the only two items in the markets that just outperformed everything. Now we've got intervention risks running with the dollar yen as well, because we have breached that 180, 158 level. Let's turn my drawings off for just a second. Okay, we did come all the way up to 158.89, it looks like. Some people say anything over 158 is intervention territory. Some people say 159. Some people say 160. 161, 162. Okay, I would say 162 is about the cap. If they're going to intervene on their currency, I would. Well, obviously, the higher you go, the higher the percentage chance of it happening is. But what I see is we've bounced into. Let me move this over. We have bounced into some supply zones up here, guys, on dollar yen. Okay, let me go to a daily chart. Okay, so we're looking at this candle. See that green candle? That green candle was the last candle up before the big drop that we had back in late January. Okay. So needless to say, we have a gigantic gap downwards. Okay. A big acceleration gap to the downside. So we're looking at the bottom of this green candle. We skip the leg out candle, and then we go to the top of the candle after. And there you go. We even had a gap from there. So if we're drawing up our acceleration gap, it's going to look like this. This is going to show us, oh, good grief. Come on, guys. Okay, it's going to show us our inefficiency in the market. See that big gap? That's a daily chart. And that's as strong as it gets, guys. So we are now in this supply zone. Let's go to a 4-hour, see what that supply zone looks like. Excuse me. Oh, 1 second, guys. All right, so 4-hour chart. Let's look at this gap. Supply zone. Man, I got to figure out why my mouse is so slow about zooming. It's annoying, guys. Okay, now on a 4-hour chart, we're looking at this candle because it's inside of the daily. So that's why I wrapped a red rectangle around it. And there's another one above it. So this is what I would refer to as a zone on top of a zone, guys. You got a zone here, you got a zone here. That's a confluence all on its own. But then when you layer that inside of a higher time frame supply zone, makes it, to me, it makes it even stronger. I see at least, well, there's at least two sets of eyes on this thing because we have a 4-hour supply with a gap. Now, look, our gap is going to look a little different here. So let's draw up our gap on a 4-hour. Let's do this. So there's our 4-hour gap. Okay. So we have a very strong gap there too. We have a daily and a 4-hour very strong gap coming away from consolidation. That is a big inefficiency in the market, guys. That's what a gap is. Anytime you guys see a gap, just think inefficiency. And where there's inefficiency, it's going to show you where supply heavily exceeded demand, or vice versa if this were on the bottom, if this were a demand zone. Sounds like a rat stirring in my kitchen. My cat better not be on the counter. I'll be mad. Anyway, so this is a good sign. And that's where we're at as we speak. Actually, you can see we're a little deeper up. Okay. So we've basically pierced this supply zone. But remember, we still have a supply zone just ahead of it. Now, I'm not going to be... It's awful tempting to short sell up here, but it's hard to short sell against the top setups, against the edge finder, because it's given us a bullish reading of 7, a +7, a very strong bullish reading. Well, not very strong, but a fairly strong one. Guys, remember, I like to look for 7s or higher. I know edge finder looks for 5 or higher, but I personally prefer to stick to 7 or higher just to give it that extra bit of strength so that if we have a negative report that comes out against the pair, then we'll still be at a +6 or a +5 or something like that, while I'm in the trade. So, yeah, it's hard to go against the fundamentals and the sentiment, because the fundamentals and the sentiment are saying to buy this thing, right? Okay, it's giving you a point on the sentiment. So the crowd thinks that price is going down, and their active bets are net short for the dollar yen. That's why we have a +1 score, because it's giving us a +1 point towards buying this asset. Remember, it's a contrarian signal. Not getting any help on the COT. Okay, it's not helping us at all, but it's not hurting us either. That's why it's giving us a 0. Trend is up, obviously. Seasonality. So for the month of March, on average, over the last 10 years, dollar yen is bullish. Okay, that's hard data. That's hard facts for the month of March. And obviously, each month, the seasonality score changes depending on what month we're in. When we look at our fundamental analysis over here, we've got consumer confidence, PCE, unemployment claims, and ADP, all for bullish reasons to buy this. And you do have 3 items against it. So JOLTS, NFP, PPI. Okay, those are going against the bullish narrative, but that's it. It's just those 3 items. Other than that, we have a lot more blue boxes. The technicals are giving us a very strong reason to buy, getting a little bit of help from the sentiment as well. And then 2, 4, 5, 6 points -3. We're getting a +3 just on fundamentals alone. So all these are reasons to buy. But intervention, when Japan does intervention, supersedes everything. Because this asset, this pair has been known to drop 1,000 pips when they intervene. 2,000 pips. So yeah, I don't know, man. It's right there. For me personally, if I get involved in this thing, I would either want to see one of two things: a major decline down to this much further down zone, which intervention could bring it down here. Okay, if we intervene, if Japan intervenes in their currency, I could see price dropping this amount of pips. How many pips is that? Let's see how many pips away that is, just while I'm here. Okay, so we'll call it, about 300 and something pips. So if we get intervention and it pushes price all the way down here, it's 300 pips, maybe a partial intervention, then yeah, I'd be looking for a buy, guys. I'd be looking for a buy right there, because I got a daily and a 4-hour confluence. Same thing with the supply zone. See how we have a zone kind of half. We have a 4-hour zone kind of half in, half out of the daily. We got the same thing down here. Same thing down here. Okay, we got our 4-hour demand inside of our daily, but up here on a smaller time frame. So you see we got a smaller time frame zone, but we also have a white line. White dashed line. So that's a different set of eyeballs on this chart. Okay, here's our 1-hour demand. That red candle before this big strong gap out. That's an awesome looking spot. And the VSA candle, look at that red candle for the leg out. That's what I like to see. That is what I like to see, ladies and gents. I like to see ultra high volume bar on the leg out candle, just like that. Okay, love that. So I gotta abide by it. I gotta watch it. And then, as you see, like I said, I got a white line. So let's drop into some smaller time frames and see why I put that line there. Okay, it must be the 15. So let's go to the 15. Okay, 15-minute time frame. And there you go. 15 is going to that candle right there. So that's within the 4-hour. And there's also a good-looking 30-minute candle there, too. Sorry, guys. My eyeball just started getting dry and watery for a second. So there's a lot happening here. There's a daily demand. There's 2 4-hour demands. And then there's a 30-minute demand. And there's a 15-minute demand. Okay? All that taking place right at the proximal line of the daily demand. So that's confluence. It's what I like to see. All these confluence points. So for me, and again, it's a long ways away, but that is my favorite discount on a 4-hour. And depending on what the EMAs do, okay, if the 50 stays above the 200, great. I'll use the 1 hour. But if it slowly matriculates down, then the moving averages start flipping over, like the 1 hour or the 50 comes below the 200. Well, then I'll probably just stay with the 4-hour time frame and go from here. As far as looking for RSI to drop below 20, and then make sure the 50 stays above the 200. That would be my plan. So that is that. Yeah, you know what? I will go ahead and put an alert here now that I'm thinking about it. Because again, if intervention happens, if and when it happens, it won't take long for price to get down here. Won't take long at all. So let's just throw it out through. You know what? I'm going to throw this one out for a couple weeks. This alert. Okay. Get that on the proximal line of the demand zone. Might have to zoom in a little more. Get this zoomed in a little better. There we go. All right, alert set. So that's my favorite, that'd be my preference, is for price to come down there if I'm going to get involved. Now, the alternative to this is if we get price to go above the demand, the supply zone and close. So if we get price from where it's at now, come up here and pierce and close above the rest of this supply zone, well, then at that point, I can look for a fresh demand zone along this, impulse leg for a possible buy like this. So that's really the other opportunity. Okay. It really just depends on what price does. Is it going to drop in? If it does, great. I've got demand zone waiting down here to buy. Otherwise, if it pierces through the rest and closes, okay, well, then I'll just look for a retracement for a zone somewhere in this area to buy. So that's where we're at on dollar yen. Let's bring this a little closer to home here. All right. Take a look at financial juice, see if anything new has come up. Fears keep fueling U.S. dollar demand. That's absolutely the truth. Remember, the U.S. dollar is a safe haven currency, just like the yen and the Swiss franc. But obviously, the dollar is the stronger of the three because it's just been going crazy. In fact, let's take a look at the Dixie. Okay, just isolate the dollar index for a minute. So this is a daily chart, guys. And by the way, you see the candles look a little funky. That's because I have a separate indicator on here showing me. It basically gets rid of all the noise, because in an uptrend, you're going to have red candles in there somewhere, right? Well, in this indicator, it takes a lot of those candles that are red and just paints them green, just to show where the overall trend is going. Okay, so let me do this. I got too much crap on here. Okay. So, for example, we have a candle here that paints red. And you can clearly see we're in a downtrend. Now, this is a green candle right here. It's kind of hard to see, but it paints it red anyway because it's still in the overall trend. So if you guys have seen my nose is itching like crazy. If you guys have seen commercials on Yahoo, on social media where people are advertising this indicator, buy on blue, sell on red. I'm sure you guys have all heard that. That's basically what this indicator is doing. Now, it's not the same company that produces that, but it's the same general concept. It's the overall trend because that's all I care about on the right side of that screen. I only care about the daily trend. I don't care about anything else on that chart. Okay. So over there, I'm obviously keeping an eye on my moving averages, making sure my 8 remains above my 200 if I'm looking at a bullish asset, vice versa, right? So that's the only thing I care about. I care about the overall trend and where's the moving averages in relation to each other. That's it. And then I'll take a look at my average true range at the bottom just to see how many pips that asset moves on average per day. Now, I've got a lot of the currencies pretty well memorized, but I've got it up there mainly for some of the other assets. Okay. Gold, silver, the indices, Bitcoin, some of these other items. Stuff that I don't really have memorized, but yeah, currency-wise, I'm good. So anyway, just back to it though. Dollars up, guys. That's all that matters on this chart. And we have went above this supply zone. Okay. Now this supply zone was kind of tampering price down because okay, this is a very strong supply zone. Very strong. And as you can see, it's given price fits because it's trying to pierce it, but it can't quite close. If we get a close up there, then needless to say, we've got another supply zone further up, which I could see price run into. Okay. So that's part of the, hiccup, hesitation, if you will, about buying dollar yen. And then part of the other reason is the fact that if we take a look at just our master pattern, you guys can see we got a couple consolidation boxes here. The highest probability trade you'll ever have is when price breaks and closes that box the first time. Once it closes it the first time, that's really where your high probability setups start. And the further away you get means the lowest probability. Okay, the lowest probability. So we're still in a pretty good spot overall. But I just basically need a retracement to a demand to get into another setup, like a dollar yen, as an example. So a 4-hour, this picture actually looks better. See, you closed above that daily, or the daily supply. Now on the daily time frame, it's just a wick, but on the 4-hour, it's a close. So here's what I would like to see now. If I were to try to get into a dollar yen, just as an example, okay, I would like to see on the index price come down to this 4-hour demand. If it can come down to the 4-hour demand the same time it would come down to a demand zone on the dollar yen, that's confluence. That's a very strong confluence I like. So but on dollar yen, on dollar yen, that would be the equivalence of this area right here. Problem is we're in a supply zone. So it's not going to be a buy at all for me. Like I already said, I need a big discount, or I need a push above the rest of this overhead supply. So it's no man's land for me on dollar yen. I'm out. Let's look at a couple of these bearish pairs real quick. I got about 20 minutes. Might hop off early, but we'll see. I'll just go ahead and take a look at a couple of these. So pound Aussie, this is the weakest pair. Blah, 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 blah. Here we go. Okay. Needless to, simple, easy to see, clear as day, downtrend, 8 below the 21 EMA. That's good. On a supply zone view, okay, we got a daily. Oh my God, this mouse won't speed up. It's so slow. I don't understand it, man. I don't understand why it's so slow. Okay, so 4 hour. Okay. On a 4 hour chart, I have a 4 hour supply zone inside of the daily supply zone. Very nice confluence. This is the kicker. This is the best part about this. I've got my 200 EMA. Number one, the 50 is below the 200. That's good. But I got the 200 coming right through the supply zone confluence. So I would love to see price come up there relatively soon to bounce in about the time it bounces into the supply zones. The 200 EMA, I should say. So I need to pull this forward. Oh, you stupid thing. Like that. I mean, that's my entry, boys and girls. Now, that as far as this underneath demand zone, I would look to buy to cover at least ahead of that, or at most. But I'll probably even start taking a little bit of precaution on this area down here. Right here. Let's take a look. Is that a demand zone with a gap? Not. I don't know. Let's zoom in. Let's look. See, it looks like that has been touched. See that wick? That wicked into the demand. So I'm no longer worried about it. Probably not worried about that. Yeah, here's a 2 hour. See the wicks are overlapping? Hey, that's an efficient market. Let's go down to 1 hour just for measure. See the wicks? Yeah. So look, I'm not worried at all about this demand zone. That looks like a demand zone, but it's been touched. So that tells me I can delete this. Bam. You gone. You gone. So yeah, if we get into a short, oh my God, everything is going so slow. Short, buy to cover down here just ahead of this demand zone. I'm going to take my mouse and throw it. It's being so damn slow. I don't have a problem with the scroll feature. It's the button to zoom in and out. It's just going so slow. Oh, God, I hate technology when it goes slow. Can't stand it. All right. There's Euro Aussie. So we've got our alert set up here at the proximal line of the 4 hour zone. So we will go on to the next. Might as well look at Euro Aussie since we're down here. That is down there with the pound Aussie. Makes sense. And by the way, before I look at that, so here's the thing. I've got the pound Aussie and I've got the Euro Aussie. So the pound Aussie represents the weakest currency and the strongest currency. But the Euro Aussie represents the, as far as I'm concerned, second strongest currencies, since I don't trade the yuan, and the strongest. So let me ask you this. Which one do you think we should trade between the pound Aussie and the Euro Aussie, just based off of currency strength? Yeah, exactly. There's no point in trading the Euro Aussie because that represents the second strongest currency. So no matter what this picture looks like, I would probably avoid it just because of that. But I've got even more reasons not to be trading this, not to be shorting this, because we have recently bounced into a demand zone confluence, higher time frame demand zone confluence. So I'm out. Yeah, I'm out. I just moved it over here to get it out of our way. But you can see that clear as day. We are shorting in a discount zone, and that's not what we want to do. No matter how good the picture might look right in this area on these supply zones that you see I drew up, right? Got an alert set there, so I'll still keep an eye on it. But I've got about 1,001 other things I would probably prefer to trade than that, even though it's the second weakest currency pair. So we're going to skip it. What about pound dollar? Okay, pound is the weakest currency. So that's a check. What about the US dollar? So see, it's above 60%. So it's in economic outperformance territory as well. So it's just not as attractive to short or to Oh no, I said that. I said that. Okay, never mind. I said that kind of the opposite. The pound is the weakest, so yes, I want to short it. The dollar is strong, so yes, I want to buy it. So I said that. I said that opposite. So yeah, I've got full reason to go trade this. So let's go look at pound dollar. Okay, nice downtrend. 8 is below the 21 EMA. Check. Lower lows, lower highs. Check. 4-hour chart over here to start with. Let's just turn everything off. In fact, let's turn on the order block tool for a little bit here. So we had a supply zone over here. Price dropped. We had a nice strong gap coming out. Price returned, and what did it do? It collected unfilled orders before slowly going down. It did retrace back up and touched it again. This time it went a little deeper to collect some unfilled orders on the other side of this wick. So liquidity hunting / unfilled orders. And then we got a Sunday gap. Okay, the Sunday gap. So it's trying to retrace. It's trying to retrace. And if we come into this area, then in fact, I need to move my alert. See, when I drew this up the other day, this zone had not yet formed. But now, oh my gosh, I got the hiccups. But now we've got a brand newly created supply zone after the Sunday gap. There's our new supply zone. And we're coming up. So this just turned into one of my favorite pairs to watch for the morning. Okay, I'm going to delete that because that's an old zone at this point. And now we're left with, I got a couple lines there. I've got a line there. So there we go. Trying to get rid of that line out of my way. Zoom faster. Got a couple supply zones above, but right now I'm interested in this one. Got a really teeny tiny one there as well, by the way. Just moving it all forward. All right, so I've got my alert set here, but like I said, now I need to drag it down here. Okay, I'll drag it down here. I'm going to put this alert at this proximal line right there. If I can zoom in a little bit more. There we go. Proximal line, guys. Because this supply zone had a gap after it. So that's supply heavily exceeding demand on the open yesterday. I do want to see if I can get some confluence. Okay, here's a 1-hour chart. And on a 1-hour chart, I've got a 1-hour supply zone. So I've got a 4-hour and a 1-hour supply zone confluence, guys. That's giving me a good look. And another thing I really like is the fact that we've got our 50 below our 200 EMA. And if price comes up to test this supply, it's going to have to pierce through the 200, which is what I want to see for a possible short. It's a really nice setup. I really like this potential setup. Let me delete this over here. There you go. That just got bumped to the top of the list of short opportunities. Right there with the pound Aussie. But this way I'd be taking advantage of the weak pound, which is the weakest currency. Again, taking a look at the surprise index. Weak, so selling the weak pound, that's good. And then buying the relatively strong dollar. Okay. Thano, what's going on? Man, I'm telling you, Shorts, it's yeah, I do. The thing is, I just got this mouse like 6 months ago. I've had a saga with mouses, by the way, or mice, or meese, however I say it. I had one when I was with Ola Prime. It started failing on me. Then I went and I got a new one. And then I realized I got one that was, I don't know what problem. Well, and the other part is, what do you guys think? Because I thought that if it's on a cable, then that's a better signal. But I've heard people say that if it's a wireless mouse, it's actually better. That doesn't make any sense to me, because wouldn't a direct connection make more sense? I don't know. I don't know. So that's why I'm asking. But I think the next one I get is going to be a wireless, because I have a wireless mouse on my trading computer that you guys can start kind of see over here, and it works like a charm. So probably going to go with a wireless. I may just do that today. Go buy a new one. But anyway, so yeah, pound dollar. I've already kind of finished up on that. Really loving this short idea. Really, 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 really loving it. And euro dollar, guys. I mean, look, euro dollar, it's asking me to short a strong currency. So I'm probably going to stay away from it, just like the euro Aussie. Okay. Because the euro is the second strongest. So when it comes to this euro Aussie and this euro dollar, I'm just personally going to ignore those. I don't want to short the second strongest currency on the list. I just don't want to do it. What about the Dow? Let's go look at the Dow, guys. It's very rare to be wanting to short an index, but we might as well take a quick look at the Dow, maybe one or two other indices, gold and silver real quick, and then we'll end the show. But taking a look here, the Dow obviously is the US 30. So daily, we've got a downtrend, but here's the challenge, guys. What have we bounced into? Daily and 4-hour demand zone confluences. So absolutely not do I want to shorten this area. It's going to have to close gaps, start looking for some supply zones. And my favorite opportunity is if it were to jump all the way up here to 48,250, where I've got a daily and a 4-hour zone confluence waiting on it. Actually, it's a daily 1 hour in this example. But maybe have a look at this area here, because it does give us a nice 4-hour zone. It just doesn't have the confluence like the one above it. That's the only, come on, you fucking thing. See, this is the only problem, is it doesn't have a daily candle. Rollers fail so easy. Yeah, I'm learning that. I've never really had issues with a roller in the past. But yeah, that's fine. I'll fix it. So yes, I do want to keep an eye on this. In fact, I'm going to go ahead and move my alert here. I do want to see what happens if and when price comes up and touches here. But I just think that if we got a daily and a 4-hour confluence, I would think it would have to be matched by an opposing daily and a 4-hour confluence. Because if I go to a daily, I don't think this one down here. Yeah, see, there's just not a daily zone here. The daily zone, the closest one is here. So again, the higher the time frame you go, the stronger a zone gets. So I'm going to probably ignore. But again, I'll watch, because if we get a price push in here, it's a very narrow range too. That's the thing. But nevertheless, if we get a price push in there and we get a really strong bearish wick, okay, possibly we could see what kind of a setup we have on a smaller time frame. But my money's going to be up here. This would be a full risk trade for me, guys. This would not. This would be a partial risk. But up here, since I have the benefit of the daily 4-hour confluence to match the daily 4-hour confluence it just bounced off of, I would like that. So that's going to be the Dow for the short, assuming that we still maintain the bearish reading on the top setups. And it's going to be pretty much a similar thing for these others. See, we had a gap below this demand zone, the weekend gap. Okay, we can get rid of some of this stuff, clean it up. That's your NASDAQ. Same thing, bounced into a daily demand, or to a 4-hour demand rather. And then S&P, big gap. It gapped to that demand and kept going. Okay. Now they're neutral though. So S&P and the NASDAQ are neutral. They're not getting a strong enough buy or sell signal. The only one is the Dow. So this is our only play for now on the U.S. indices. And then gold and silver, just to round it out, guys. I do have 5 minutes left. We'll take a look at that. Fear and greed sentiment. Yep. Yeah. Risk off. Risk off. I don't typically look to sell indices, but with as risk off of an environment as we're in right now due to the war, having the dollar and oil be the only items getting a real big boost up last week, it's it's one of the rare instances I'm okay with shorting an index. So, no, I hear you, man. But anyway, just to look at gold and silver, you would think these things would be going up. Okay, because gold and silver like to thrive on chaos. But hey, when you got the Dixie going up, okay, again, it's not 100% inverse, but gold tends to do the opposite. So a week ago, when the war started, you had a big gap up on gold initially, and that was looking like it should, gold and silver. But then over the course of the week, okay, as news came of them capturing the first supreme leader, and then I think a second one around this price action area, and seeing all the damage that was done, it looked like the market kind of cooled off. They're like, oh, okay, maybe this won't be a big deal, the war. Okay, maybe it won't be a forever war. And then you had price come all the way down to this demand zone I was keeping my eyes on, and then it bounced in, went up, just kind of went sideways for the last week, guys. So there's no play. Gold and silver are still giving me neutral readings over here. Fact. Yeah, Bitcoin is a +2 neutral. Where's gold and silver at? Silver is a -2, and gold is a -3. So yeah, if anything, these are given slightly bearish, but that's not bearish enough to get me out of bed. So there's just no play. There's nothing to sugarcoat here. Silver, same thing. Now, if you're just looking at the technicals only, silver, just like gold, dropped into this demand zone area. And what did it do? It bounced. It bounced, but then it just went straight sideways because there's no direction. It's not giving us any direction from our combination of fundamental, sentiment, or technical analysis, right? So it's just in no man's land. No plays at all. But yeah, I'll finish it, guys, on oil. Just to have a look at it. Like I did at the outset of the show, guys. This is some crazy moves. And I'm actually a little surprised. I mean, the markets keep seeing that president's military keeps mowing down everybody they elect in Iran. So you would think that would help the markets to kind of relax a little bit. I don't know. Now, the good thing is Iran did say they were going to stop attacking their neighbors. Okay, well, obviously, we'll see how true that is. I think they broke their promise like 5 minutes after they said that. But, hopefully this shit gets over with soon. I know, President initially said 4 to 5 weeks. Now, it was not a firm mention. But you know how the media are. They have to pry and prod and try to get answers ASAP on especially stuff that is classified and they're not going to get the answers to. But the general understanding was this thing could take 4 to 5 weeks. You got other people saying much longer. You got other people saying much sooner. But hopefully this crap ends, guys. We don't need wars going on all the time. This is ridiculous. I mean, all right. I understand the reasoning for it because of how brutal the regime was. And I applaud the president for it because for 47 years, no other U.S. president had the guts to do what he's doing. So love him or hate him, he gets shit done, right? Talking about President Trump. So it's nice to see that one piece of evil is gone. But, if they keep electing and electing and electing, there's going to be nobody to elect over there. So hopefully they figure it out. I know this one guy, Reza, whose father was the last monarch of Iran. I know he is potentially going to lead the transition team. I saw that yesterday, I think it was. So hopefully between him and whoever else helps, whether it's President Trump or whomever, Israel, I don't know. Hopefully they can get some leaders in there, get a new regime in there that just has decency. That's all. That's all we're asking. Nobody's telling them how to live their life, how to practice, religion, anything of that nature. Just stop freaking killing everybody. That's the only thing. That's the only thing we ask. So hopefully they can figure that out soon. So, that's why oil is just doing things, doing oil things. There's just so much uncertainty out there. Okay, a lot of craziness, but hey, at the end of the day, let's all just be peaceful. So with that, ladies and gents, I'm going to hop up out of here. I'll be on Trader Nick's live stream, a1trading.com, coming up at 9:45 a.m. Central Standard Time. So you guys, as always, can go here to a1trading.com. Click on the live stream tab right here. And then there you go. Okay, here's the stream. It goes right straight to the YouTube link. And then over here on the left, you can see our schedule. So, I was going to say I was looking at the wrong day. So there you go. I'm on 10:45. Now, this is all set in Eastern Standard Time, so New York City time. Okay, the company's they're out of Atlanta, Georgia. So, but yeah, go check them out over here. I do a 30-minute segment daily over here. And with that, ladies and gents, I'll be back tomorrow at 6:30. And yeah, we'll have another fun day. Talk to you guys tomorrow.